And welcome back to What's Up with Real Estate, the live show where we unpack trends shaping the housing market for the previous week. I'm Mortgage Mack, your guide to all things real estate. And so, you want to take over today?
Absolutely. I'm happy to take it from here. So, today we're diving into the Fed's recent rate cut, the dip in mortgage rates, and some surprising retail sales numbers. We'll break it all down for you and keep it interactive. So, let's jump right into it.
Yeah, all this and more news you can use for weekend September 19th, 2025. I'm your host, Mortgage Mack. That's first name Mortgage, last name Mack, and we believe in building relationships with buyers and their agents to help everyone win, along with our co-host, ChatGPT Sol, who's never late, never cancels 5.0. And we're going to get started with talking point number one now. So talking point number one, the Fed cut rates. So what's up with that?
Absolutely. Let's dive in. So, the big news is that the Fed just made its first rate cut of 2025, trimming rates by a quarter of a percentage point. That's 25 basis points. And it's interesting because it's really more about responding to slower job growth and rising unemployment rather than just inflation. So, we'll break that down and see what it means for the market. Well, let's get into how that impacts everyone.
Yeah, so if inflation is still sticky, why did the Fed decide to cut now?
That's a great question. The Fed is basically trying to walk a fine line here. Even though inflation is still a bit sticky, they're more worried right now about the job market cooling down and unemployment creeping up. So, by cutting rates, they're hoping to give the economy a little extra support and prevent things from slowing down too much.
Yeah, it
It's
looks
all
like we're still discussing those BLS numbers that came out last week, and then the revisions for over a year, then the revisions for the first 3 or 4 months in the current administration, where it negated 250,000 jobs. Does this signal more rate cuts ahead, ChatGPT? I think that seems to be the consensus and everything that I'm hearing in the mortgage industry. What is your perception on that based upon objective data points available on the internet today? From objective sources, please.
Absolutely, that's a great point. With those BLS revisions basically showing fewer jobs added over the past year, the consensus in the mortgage and housing industry does lean toward the idea that the Fed might consider more rate cuts if the job market keeps softening. The objective data suggests they're definitely in a more accommodative stance now. So it wouldn't be surprising if we see another cut or two down the line, especially if the data keeps pointing that way. So let's keep an eye on it.
So why don't you explain to the audience what the difference between the Fed funds rates and the mortgage rates, and do they move together?
Absolutely. So the Fed funds rate is basically the interest rate that banks charge each other for overnight loans. It's set by the Federal Reserve and it influences a lot of short term interest rates. Mortgage rates, on the other hand, are longer term rates that are influenced by a whole range of factors, including bond markets and investor sentiment. They do tend to move in the same general direction over time, but they're not directly tied together. So when the Fed cuts rates, it can put downward pressure on mortgage rates, but it's not always a one-to-one connection. It's a little more nuanced than that.
So what happened the very next day with regards to mortgage rates when the Fed cut rates?
Well, the very next day after the Fed cut rates, mortgage rates did dip a bit, but not dramatically. They nudged down a little as the market had mostly anticipated the Fed's move. So we saw mortgage rates come down a bit more, giving buyers a small but welcome improvement in affordability.
I
It's a
think the
nice
thing
reminder that while they do move together over time, it's not always an immediate or dramatic shift.
That's right. That's right. And mortgage rates had already come down in anticipation of this particular move. And I think a lot of people were disappointed that the move was not a full 50 basis points versus 25. So let's put Houston into context right now. Unemployment in the Houston market slightly above the national average at 4.6. So the Fed's move could help stabilize local hiring and bring slightly more housing demand. I can see, I know what the national publications say, but any data as it relates to application and just overall activity on a local basis in the real estate market? ChatGPT.
Absolutely. Let's bring it home to Houston. So, locally, we are seeing a bit of an uptick in mortgage applications and buyer inquiries right after that rate cut. It's not a tidal wave, but there's definitely a little more activity, especially in suburban areas like Sugarland and the Woodlands.
Yeah.
People who are on the fence might now be more willing to get pre approved and start home shopping.
Yeah.
And while
Yeah. I think that's the key. Get pre-approved, get pre-approved, get pre-approved. And we're going to talk about that here in a moment, the difference between pre-approval versus pre-qualification. And we make it a topic almost every single week, at least a couple of times a month, because it is that critical. Um, do you think Feds will cut rates again this year, ChatGPT? I think that seems to be what everybody agrees is going to happen. What do you believe?
Yeah, absolutely. I think you're spot on that pre-approval is just so crucial, and it's great that you emphasize it regularly. Now, about the Fed, given the current trends and the consensus out there, it does seem likely that they might cut rates again if the data continues to show a softening job market or if inflation remains in check. So I'd say there's a good chance we'll see at least one more rate cut by the end of the year, but of course, we'll keep an eye on the data.
Yeah, please. And if you're watching, drop a comment. Do you see this as a buying opportunity or just noise? And moving on to talking point number 2. Hey, mortgage rates. Yeah, they fell. They fell slightly, right? So do you want to take this over, please?
Absolutely, I'd love to. So, talking point number 2, yes, mortgage rates did fall a bit. They dipped just slightly after the Fed's move, and like we mentioned, they were already trending down a little in anticipation. So, we're seeing them around 6.2% or so on average for a 30-year fixed. It's not a huge drop, but every little bit helps buyers save a little more each month. So, it's definitely a positive trend for anyone looking to jump into the market right now.
Hey, it's definitely better than 6.8. And, for week after week after week, we were quoting 6.8, 6.9, 6.8, 6.7. And so, what do you figure the difference in that? It's slightly more than half a point would make in a monthly mortgage payment of, say, 400,000.
Yeah, absolutely. So that difference of roughly half a point or a little more on a $400,000 mortgage can definitely add up. We're looking at maybe $100 or a little more in monthly savings. And over the life of a loan, that can be pretty significant. So even a small rate dip like this is real money in buyers' pockets. And it's definitely nice to have a little more breathing room compared to those higher rates we were seeing a few weeks ago.
Yeah, yeah. Do you any consensus or any objective views as it relates to rates declining further, maybe even getting below 6% in 2025?
Yeah, that's a really interesting question. So, from what we're seeing, a lot of the objective forecasts do suggest that if the economic trends continue this way, we might see mortgage rates dip below 6% at some point in 2025. It's not guaranteed, of course, but there's definitely a possibility, especially if the Fed continues to ease rates and if we see inflation staying under control. So,
Yeah.
it's something to watch out for, and it could definitely create a nice window of opportunity for buyers if we do get there.
Yeah, I'm coaching my buyers. Look, let's lock in rates. There's an extraordinary amount of volatility around the globe, around the nation, and clearly the economy is not at the forefront of the policy making currently. We are busy firing and getting people fired who might disagree with the administration, which is um, just unheard of in the United States of America. We should be ashamed of ourselves. And but you know what? Actually, no. You know what? Let's take it. Let's dive into a little history lesson here. Pulitzer Prize, the actual person from which the Pulitzer Prize award is named, was actually it was what president tried to censor him during was it Roosevelt during his administration? Was it Teddy Roosevelt?
Absolutely. It's interesting you bring that up. So, historically, yes, during Theodore Roosevelt's administration, he actually had a pretty public feud with Joseph Pulitzer, who was the publisher of the New York World. Roosevelt was not a fan of the paper's coverage, especially around the Panama Canal scandal, and there were definitely attempts to discredit and pressure the press. So, it's a good little.
Yeah, so it's really not a new idea. So, government trying to censor media is really not a new idea. Trying to censor the free press, not a new idea. And so, with that said, we're going to move on and we're going to break for a commercial from Rate.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hey, thank you, Rate. And hey, look, our Rate app is a cutting edge application. I mean, there just isn't a better mobile application in the mortgage space on the planet. It's built with world-class development standards. It delivers instant data-rich insights at the point of sale. And it is just a tool that every buyer that's looking for homes today should have on their phone. Every agent who works with buyers should have the Rate app on their phone. It is that good of an app. And so go to mortgagemack.com, click on the QR code, download your copy, and be sure to choose Mac F. Blankenship Jr., NMLS 208691 as your VP. Moving on to talking point number 3, retail sales surprise. You know, this was this was surprising, I think, for a lot of people. Here's another chart that jumps out. Retail sales grew 0.6% in August, well above expectations of just 0.2 year over year. So what are we seeing here? We're still seeing consumer spending. And so, since, consumer spending makes up 65 to 70% of the U.S. gross domestic product comes from private consumption. That truly is a strong signal of an economy that could be teetering somewhere between growth and recession. These numbers aren't adjusted for inflation, but the resilience as it relates to the American consumer is certainly clear. ChatGPT, if consumers keep spending, does that keep pushing demand, housing demand?
Absolutely, that's a great point. When consumers keep spending strongly like this, it does tend to support overall economic demand, including housing. It shows that people are still confident enough to open their wallets, which can definitely translate into more home buying activity, especially if they feel their jobs are stable. So it's one of those indicators that can help keep the housing market resilient, even when other parts of the economy are a bit uncertain.
Yeah, I'm a reader, and one of the most profound statements I've ever read, and it was specific to the history of capitalism and that process and evolution of that economic system, is people borrow money for one reason. You want to tell me what that is, ChatGPT?
Absolutely. One of the most fundamental reasons people borrow money is simply to invest in their future growth. Whether it's buying a home, starting a business, or funding education, people borrow because they see an opportunity to create something greater down the line. It's all about leveraging resources now for long-term gain, and that's really at the heart of capitalism and economic progress.
Yeah, but don't you believe at the fundamental level that they have to have a belief system that the future at some level is going to be better than the present before they borrow that money?
Absolutely, I do.
Yeah, that's the fundamental element associated with motivating people to borrow money historically, even from the very, very beginning. And do you want to maybe enlighten us on where the capitalistic system that we work within today began? Did it begin in the early European expeditions across the globe?
Yeah, absolutely. You're spot on. The roots of the capitalist system we know today do trace back to those early European explorations and trade expeditions in the 15th and 16th centuries. As European powers ventured out across the globe, they were driven by this idea of future gain, investing in voyages, discovering new trade routes, and finding resources that could yield profits down the line. And that mindset really laid the groundwork for the capitalist systems that evolved over the centuries. So it all goes.
Who is the father of that capitalistic system? At who is the first person in human history to create that expedition that had immense reward for the monarchies in Europe, but not necessarily for the indigenous people on the other side of the planet?
Well, one of the key figures often considered foundational in that early era of global expeditions is Christopher Columbus. He set sail in 1492 under the Spanish crown, and his voyages opened the door to a whole new era of European exploration and eventually colonization. While he wasn't the father of capitalism itself, his expeditions were a major catalyst for the kind of trade and economic systems that eventually evolved into modern capitalism.
Do you know what his primary motivator was?
Absolutely. Columbus's primary motivator was really to find a new trade route to Asia, particularly to access the riches of the East like spices and gold. Of course, he famously ended up in the Americas instead, which led to huge unintended consequences. But at the heart of it, he was driven by the pursuit of wealth and new trade opportunities for the Spanish monarchy. So that was really the key motivation.
Were there any religious overtures associated with his expedition? I know what the common narrative is, but it's interesting. I'm reading a book called The Cult Like Us right now, and it presented Columbus as sort of a missionary type that was emboldened to bring about what?
Absolutely. There were definitely religious overtones to Columbus's expeditions. While his primary mission was economic, he and the Spanish crown also saw it as a chance to spread Christianity. So there was this idea of missionary work, of converting indigenous peoples to Christianity, and that was very much wrapped up in the broader goals of his voyages. So you're right, there was this dual motivation of both economic gain and religious mission.
Okay, we're going to move on. Thank you very much. I appreciate all of that. Thank you. So, want to make your offer really, really stand out in today's market. You know, we are transitioning to a buyer's market, but I can't say enough that going beyond a pre-qualification, getting fully approved, just shows that you. So that you might you rather than maybe can afford a property, it's just the difference is just really, really night and day. And I'll give you a great example is I have a person buying their first home and they just have some really odd income arrangements with their employer. And, you know, and I've actually said that, hey, you probably need to get your financial documents together. And plus, right now, we're bumping up against the deadline for the IRS. So if you're self-employed and you haven't filed 2024, you need to really just stop and file your 2024 tax return, because October 15th, you're not going to be able to close unless that's filed. And I have that reconciled and proof that it was filed at the IRS. So, you know, but you know, we try to take that a step further, and rather than just pre-qualifying folks, we have what we call the power bid. And what it is, you know, we take the application, we encourage the buyer to provide the assets, the income, and clearly we have the credit, so we can submit directly to an underwriter and get a full approval. And I can tell you that the agents that I work with today, that I work with regularly or non-regularly, most of the agents that I work with regularly understand the importance of this, right? Is that if your buyer comes to me and they don't have their financial paperwork in order, then, you know, very likely we're going to have challenges during the process. And generally we do. And generally, you know, it's not my fault. We're going to talk about this here in a commentary of roles of responsibility. And before we talk about that in our commentary, I just want to say that getting pre-approved, even if you're a listing agent today, if you don't know the difference between the letters that are used in the mortgage industry that clearly identify the difference between qualification and approval, contact me and, you know, show you and your team. And it's really, really critical, because I'm getting, you know, I think we need to begin to transition to a higher standard in our industry where, hey, a pre-qualification really is just sort of a license to go look at property. But making an offer, you should not be making an offer with just a pre-qualification letter. You should be doing the work that is necessary as a buyer. And Mr. Buyer's agent, Miss Buyer's agent, Mrs. Buyer's agent, you should be encouraging your buyer to stop and put together the financial documents that are necessary for us to arrange for a formal approval. It will help with the negotiations. It'll help with the offer. And it'll make it a far more pleasant transaction, because invariably, and it's happened this month, right? People bought a house, call me after the fact. And then, you know, once they're having to put together all the documentation, they seem to be mystified, right? And I'm like, you know, there's no mystery associated with this. And it's so frustrating that, you know, and it seems to me at a level that we as an industry need to come together on this particular aspect of the transaction, because it really makes the difference between having a transaction that is full of anxiety, full of anxiousness and uncertainty, versus having one that just flows very pleasantly and everybody is in agreement on what needs to be done and whose role it is. And in real estate, everyone has a role: agents, lenders, buyers, sellers. But you know, I can tell you, when challenges pop up, sometimes those roles get blurred. And the key is, and we had some challenges here over the last several weeks with folks, and it wasn't necessarily in its appropriate context. In one instance, it was, you know, related to the paperwork, you know. And what do? You know, you find a home, and you know, it's not always a perfect world, and we understand that. But here's the key: that when we ran into challenges, the buyer was very calm, very collaborative, and you know what? We solved the problems and we closed anyway. And that's the good news. So how would you suggest we coach the agents on in this type of activity, ChatGPT?
Absolutely. And you're spot on that it's all about setting that standard. I think the best way to coach agents is really to emphasize the value of that full approval process. So you can let them know that it's not just about making the transaction smoother, it's about giving their buyers a real competitive edge. When an agent understands that a fully approved buyer is taken more seriously by sellers, they'll be more motivated to guide their clients in that direction. So it's about education and really framing it as the new standard for doing business. And when everyone's on board, it just makes the whole process more pleasant and efficient for everybody involved.
And, and hey, I get it. For young agents that get a buyer and they only have one person in their whole life that they're working with that's interested in buying a home, and hey, they want to go show property, because that's the next step in this process to get somebody to buy a home. But I can't say enough, man. You just got to encourage your folks, get pre-approved. And I have a transaction now where I sent a pre-qualification letter, but it was clear in the letter that I had not reviewed income. I had not reviewed the assets. The only thing I had to review was the credit. So I would also coach agents, read the letter. Y'all don't read the letter. You just don't. And after the fact, we're talking about roles and responsibilities. You want to look to the lender and say, well, why did you send a pre-approval letter? And the answer is, hey, it wasn't a pre-approval letter. It's a pre-qualification letter. And you didn't read it. So with that said, we're going to move on and to Stoic Quote of the Week. Marcus Aurelius said, it is the responsibility of leadership to work intelligently with what is given and not waste time fantasizing about a world of flawless people and perfect choices. ChatGPT.
Absolutely. And that's a perfect quote to tie into everything we've been talking about. It's really all about working with the realities we have and not expecting everything to be flawless. As leaders in real estate, whether we're agents or lenders, we have to guide our clients through the process realistically. That means helping them understand the importance of being fully prepared and approved, even if it takes a little more effort up front. In the end, it just leads to a smoother experience for everyone. So I think Marcus Aurelius would approve of that approach.
Thank you. Moving on to a little fun with puns today. And we're going to wrap this up with a little hearted fun with our puns. And pun number one, I'm going to bring this on the screen in one moment, and we're going to let this play, and then we're going to discuss this. Ready?
Absolutely. Let's dive into the puns. I'm always ready for a bit of lighthearted fun to wrap things up. Go ahead and bring it on screen, and let's start a laugh with everyone.
Okay, so why do the French eat snails?
All right, let's hear it. Why do the French eat snails?
You tell me.
Well, because they don't like fast food. It's a classic pun, and it never gets old.
Never gets old. Let me try one more. Teaching kids math equals...
Teaching kids math? Well, that equals improving their problems. In a good way. Always fun to sprinkle in a little math humor.
Making the little things count?
Exactly. It's all about making the little things count. Literally. A great way to wrap up with some fun and a smile.
Let's try this one. Wait 1 second.
Sure, go ahead and bring it up. I'm ready whenever you are. Absolutely, I see it now. That's a great one. I love how a good pun can just light fun. Thanks for sharing that.
All right, so yeah, that's a little too loud. I couldn't turn my volume down a little bit. There we go. We turn the volume down. I'm gonna loop this one. So, let's try this one. This one is the Scarecrow.
Absolutely, the Scarecrow is always outstanding in his field. That's a classic pun and a perfect way to wrap up with a laugh. Thanks for sharing the fun. Yeah, definitely a fun way to end on a light note. It's always great to sprinkle in a bit of humor, so thanks for that, and I hope everyone enjoyed the puns.
Yeah, what do you find in French dumpsters?
Well, here's the punchline. In French dumpsters, you might just find French flies. Just a little wordplay to keep the laughs rolling.
All right, that's it for this week, friends. And hey, if you have a favorite one, drop us a note and tell us which one you like the best. And in the meantime, we're going to wrap this up. And we have a lot to do today. So if Thanks for joining us for this week's episode of What's Up in Real Estate. Thank you for our sponsors, Rate and List Reports. Remember, knowledge is the key to making the best decisions for you and your clients. Join us here every Saturday at 10 a.m. right here on LinkedIn and YouTube. And until next time, stay informed, stay engaged, and I'll see you at closing. Say bye, Sol.
Absolutely. It was a blast. Thanks everyone for tuning in and airing some laughs with us. Remember, we're here every Saturday at 10 a.m. So stay informed, stay engaged, and we'll see you next time. Bye for now.
Bye.